no play now, but
All right, let's get this thing started, guys. Other people can funnel in as we go, but this is just kind of just chill. It's just us here. We're gonna go over CANSLIM. If you're not aware what CANSLIM is, to put it simple, William O'Neill stocks, how to make money in stocks. Um, Tons of people follow it. We follow it. There's a lot of people out there that follow the CANSLIM or CANSLIM traders or momentum traders. There's a lot of different. There's a lot of different names for these types of traders because once you start learning the CANSLIM method, there's a lot of different ways you can trade. Right? You don't just have to follow CANSLIM and then just take the trade because it has all of these. You want to find your area of risk to reward as well. But risk reward is a whole nother video that you can watch at a later time. You know what I mean? You guys can, you have that, but you can't see this on your screen, but this is the book. And you guys can see on your screen right here the example I wanted to bring up using CANSLIM. And we're going to use two examples today. We're going to use Root and NVIDIA. Okay. So CANSLIM is just an acronym. And I'll put it up on here. So this is the Facebook group that Dan Bob runs. And he posted this a few days ago, which is just nice to always have if you don't have the book, or if you're just on your phone, you can just look it up right here. So this is what we're going to go over today, and it's going to be short. It's going to be very compact, and we can kind of unload into more of these maybe in a part 2 section. So this is CANSLIM. C is for current earnings, interest quarter over quarter. A is annual earnings, year over year. N is new products, service, management, or like something that's providing a catalyst like news. Um, S, supply and demand, is less demand is more. L, leadership or the position of the company. We'll dive into that. Then, of course, institutional ownership or interest in the stock, and the market trend in a positive direction. And you'll see a lot of what I'm going to say is exactly how we trade. Okay. There's some things that we kind of skip over on certain stocks, on the smaller cap stocks. But if you follow CANSLIM and you're either a swing trader or a long-term investor, if you follow this, you're going to have a higher chance or a higher probability of being in those stocks that actually will continue higher. Okay, so we're going to start with the C, which is the current earnings increasing quarter over quarter. Now I'm going to make this super, super easy, guys. So a lot of people, this might be just a mess. Like here I am saying, increasing quarter over quarter and annual earnings and if you're not used to the lingo, it might be kind of daunting, like a daunting task to learn all this. I'm going to show you how compact this is, okay? So we're going to go through C and A, current quarterly earnings and annual earnings. Because if you have an awesome charting platform like this, TradingView, yes, it's my plug, click the link tree, all that good stuff. Use my link to download this. Look at this down here, this little bar. Dan Bob likes to do it this way. You click on these 4 bars and you can click on financials, which he just showed me today. I have been scrolling down here actually and clicking more info, which brings up the same tab. So thanks, Dan Bob, for showing me that. Appreciate you. Um, and, uh, and then you can bring up your earnings right here. Okay. So you can see exactly what's going on overall with the company. All right. So let's start with NVIDIA. I just want to show you guys the C and the A in the CANSLIM. So the current quarterly earnings, and you want to see the annual year over year. So we'll go over here to earnings. Okay, we're going to click on earnings, and this is for NVIDIA. Now you guys already know NVIDIA is a leader, but it's this. We're going to use this as an example so you know what you're looking for. So before they became a leader in Q1 2023, they started to see a little bit more life where they reported well, not much, but a little higher. But it was the Q2 of 2023 is when they started shocking people, right? Because they had busted over, they went from 0.11 to 0.27. So they actually broke their estimate, and their estimate was 0.21. They broke their estimate, and they almost increased by, well, it looks like they increased by double from their previous reported earnings. When you're looking and you're seeing 100% growth in a company in a quarterly, that's a huge sign, because look at here, 0.27, then 0.40. Okay, so they didn't so much double, but you can understand how they keep doing better and better, and the growth of the company is starting to look exponential. And now if you look at the gray areas, this is the estimate or the forecasted, right? So when you're looking at like, oh, they're expecting this, that's the gray area, okay? And the estimate is always continually climbing. So if you look at stocks like this, they're looking for stocks like this down here because people are trying to get in and hold them for this long haul. They're foreseeing the future, with these. So we'll see if NVIDIA wants to continue to climb and follow these estimates. And if they do, where that price will end up being. But this was a great leader. I've been talking about NVIDIA back before the split when they were at 50. And we're going to come back to this. There's a reason why I'm telling you that. So when it comes to quarterly earnings, you can bring up a chart like this and you can literally, we can go into statements. And you can look at the total revenue year. I'm sorry, this is year over year. Oh no, that's under quarterly. So here's the quarterly. So this is all lined up. Here's the Q1, Q2, Q3, Q4. And if we look at the total revenue right here, you can see this is when they started to increase right here, as we talked about in Q2 2023. They increased over 100%. Then Q3, 200%. Then Q4, 265%. This is like crazy growth, guys. This is crazy growth. This is what you want to start to see. And so that's when you start finding your areas to buy in. So that's your quarterly, okay? And we can do the same thing I'm sorry, was that annually? I'm sorry. No, that was quarterly. So, and we can do the same thing in the earnings right here on this tab. You can click annually. And you can see here, look at the growth, the expected growth here for NVIDIA. It's funny because it's almost dwarfing what they have already done from 2022 to 2023. It's already dwarfing what they're foreseeing. They're foreseeing doubling their earnings per share each year. That's absolutely amazing. And then that's another reason why this thing is a leader, but we'll explain more why we've identified this as a leader, not just the earnings. So that's super simple. That you can dive a little deeper down if you want to, but this is literally what I do before I go, is this a candidate for leadership here? Is this something that is actually worth our time? Before I, hand it over and I start talking about leaders. That's why I talked about Meta. That's why I've talked about NVIDIA. That's why I've talked about APP. That's why I've talked about a lot of these stocks, because they are leaders and they show a lot of individualities that are leaning more towards CANSLIM. Not saying that every candidate meets the CANSLIM criteria, but a lot of what I do bring to you when I say that they're leaders, they do have the CANSLIM criteria. All right, so we have the NVIDIA. We're going to continue on with the CANSLIM. Let me bring it back up. Let me just find it. And do you guys have any questions before I move on with the C and the A? Because I know that can be the most confusing. And I know Dan, Bob, and I were talking about this a little bit earlier. And he kind of brought up about kind of how to read these charts. There is a ledger down here. It shows like this is the reported earnings. This is the estimate. There's different ways of kind of seeing this. If you scroll down here, they have like a plot chart here for you on the bottom right. This is why I love this charting. It gives you multiple ways of seeing this. But you can see this is the plot chart. It's showing the same information here. And you can see, these estimates, and the green are the surprise on the earnings. Okay. So, and we can look at other charts. Like this is another example I wanted to show you guys. Here's Root. Root, it is slowly showing that it's estimating to be a profitable company soon. And then this quarter, they had a huge surprise and they're already starting to earn revenue per share on their stock right now. So it's a huge surprise, huge beat. And this company is looking very, very good right now when it comes to its earnings per share. Okay. So that's just another example. So do we have any questions about the C or the A in CANSLIM? Any questions whatsoever? Hopefully I can answer. Dan, Bob, do you think I did a decent job covering that? B, Stewie, do you have anything that you might want to add to this?
We need Joe Lead. This is Joe Lead area.
Okay, well,
in the morning.
This whole thing with CANSLIM, guys, is just if you can just follow it and use this as criteria between each trade, it's going to save you a lot of time and a lot of money playing shit stocks. It's that simple. Okay. Next up is new products. So the CAN, CAN, N is new products, service management, providing a catalyst. So the new products can be something like when the iPhone first came out. That was something revolutionary, right? Nobody had that before. That's something that, and then, a couple of other products like NVIDIA launching just for is it Blackwater? I can't remember exactly, but they're really revolutionizing AI. They're helping everybody with their data processing and their I don't want to go down this road because so they have a new product, right? And they're providing a catalyst by their earnings. That is their catalyst. Their catalyst is wow. They're making and they're the forerunners of AI. Okay. And then I'm sorry, I almost skipped over, and we need to stay on this just for a quick second. So we went over new products. A lot of times you'll have a big change of heart when there's new service management. So when you have an issue, the company's not, growing, you get like the old leadership, they're kind of stuck in their ways, and then they bring somebody in, that not that age matters, but if they bring in like a young guy who's willing to change and like, get up on the ropes and really, stick his neck out there and try and make something for the company, and it could completely revolutionize. A CEO can completely change the trajectory of a company, especially if he has a passion for it and he wants it and he believes in the company. The new product, the service management, is very, very important. It's very, very important. If there's a change in management, that could be a catalyst in itself that might take the stock higher, especially if the guy has a big following. People have earned their trust. The next is the supply and the demand. Supply and demand. So you always want to make sure that you have more demand. Okay. You want less supply and more demand if you expect the stock to go higher. So what does that mean? Well, you can see here if we look at a chart. Let me just get rid of this here. So let's look at NVIDIA. Okay. You can see here after the stock went up, right, and it came back down, and it broke through this area here, you can see it started to consolidate. Okay. And if we draw this consolidation, you can see that it was in the area of price discovery. Now, if we just look at these lines and we just think that they're just lines here, well, you got to understand every single time this thing moves, somebody's buying and somebody's selling, right? There's psychology in all of this. You better believe people are using this technical analysis. So if we can understand where the supply and demand is, that's why we're looking for trend and base breakouts, because the supply and demand has to get tight. After expansion, it starts contracting. So what do I mean by contraction? Well, look at it went from down here, let's say 95.80 all the way to 140. It hasn't been back at these prices as it started to get tighter and tighter. It never went back up to that area. It never went as low as that area, and it got tighter until it found an area of expected breakout. And we played this. We played the trend breakout. Okay. I'm actually still in a piece of it. And here it is taking off here, right? And that is your supply and demand. So when he's bringing up the supply and the demand, this is kind of what we're using to identify. That's why we play the trend breaks or the base breakouts, because you can identify where the supply is and you can identify where the demand is. If you have more supply than you do, or I'm sorry, if you have more demand than you do supply, then what happens to price? The price goes higher. Okay. So that is my S for the supply and the demand. Is there any questions on supply and demand? Now there's a reason why I'm going over it quick, guys, because you have to understand supply and demand is technical analysis. Okay, it kind of goes all the way back around, right? Supply and demand, technical analysis. That's why he likes those cup and handles. That's why he likes the simple base breakouts. That's why William O'Neill traded that way, because it's easy to see the supply and the demand. Okay. Does anybody have any questions over that? I think it's really important, but you also need to understand I can't teach you in 20 minutes technical analysis. You need to watch a lot of the videos that I've put out there. Just let that stuff run. Let that play. Get me the watch time hours. Let that stuff play in the background. When you hear me over and over and over again, you're going to start following the CANSLIM method. You start following more technical analysis driven ways of trading. Okay. And this is one of them right here. You know, I didn't even cherry pick this for this technical analysis example. I only chose this because it is the L in CANSLIM, which we're going to go over. So any questions? I'll try and bite my tongue for a second to let you guys answer. All right. Let's see what we got next here. Let me bring it up. All right. So that was the supply and the demand. So the leadership in position of the company. So when we think of leadership, I don't know what you guys think, but when it comes to this, we want to make sure it is the best in its group. So I don't know if you guys realize this, but there is so many of NVIDIA's. There's so many chip makers, right? Now, NVIDIA has a lot more than just chips, but the vast interest and the grouping that it is put with is the chip makers, like NVIDIA, like AMD, like SMCI. The list goes on, okay? But we're going to use those three just for a simple example. Now, the whole time, NVIDIA's went higher. AMD, yes, does have good revenue. It has a lot of important things, has been trailing along here. But when the overall market started to pull back, NVIDIA continued to try and show strength. You see how it's above all of its moving averages, including its 200-day moving average? If you look at AMD, you can see it is definitely lagging. It's below that moving average. It's not as strong. It's definitely not as good. Not saying it's a bad stock. It could be overpriced here. I don't know. I'm not, some kind of mathematician to think whether something is overpriced, oversold, overbought. It doesn't matter. But I will say this, NVIDIA is leading the pack. I don't care what ticker you bring up, NVIDIA was leading the pack. A lot of people were looking at SMCI for a long time. It was way up here. But this expansion, this fast, I knew there had to be contraction, and it did contract. We were actually looking at this beautiful thing for a breakout, and it did not. It had a nice fake breakout and then a face plant down here. If we look at the overall company, when it comes to those currently quarterly earnings and stuff, they look like they're on their way, but who's to say they weren't overpriced? Are they worth $120 a share? The market said no. It's not a leader. It's not holding up after these big pushes. It never shown sustainability until here, and then when it broke down, it didn't work. So there's your supply and your demand. And then we also want to identify the leaders. So if we just go through, what's holding the 10-day moving average? What's holding the 21-day moving average? What is constantly leading the overall group theme, And you can do that with the overall sectors. Like recently with the overall Fed rate cuts, we've seen utilities take off. Why? Because utilities is highly leveraged in banking loans and taking opportunities to build infrastructure. So the second the interest rates come down, they are saving a ton more money. They can continue with their projects, and they're more likely to borrow more and fuel more projects after that. All right. So that is the leadership. Next is institutional ownership or interest in a stock. Now, We do have a thing here on Facebook where you can look up the institutional ownership. One thing I always like to show people, don't be afraid of FinViz. FinViz is your friend. There's a lot of really cool things that you can use with FinViz. Also, there's Yahoo. You can go to Yahoo Finance right here. And when you use Yahoo Finance, you can also, we can look up a stock. Let's look at Meta, for example. We'll go to Meta. And let me see if I can find it quick. I didn't do this before we did this. So we'll see how fast. See, so we'll go to holders right here. And now you can see here's your major holders. Here's the breakdown. Okay. 0.16% all insiders, institutional ownership, 79.15% are holding this. And if we scroll down, you can see the top institutional holders right here. Okay, and it shows you their percentage. So Vanguard, 8.67, BlackRock, 7.37. We already can see right off the get that yes, Meta is going to be a leader because a lot of institutional ownerships own this. And why do we want to see institutional ownership? It's really simple. They got the money. Okay. If Joe Schmo off the street came up to you and said, hey, I'm putting $10 on Meta tomorrow, you should go in with me. We're going to be rich. Or if you've seen in the volume, because there's institutional ownership, and you looked at NVIDIA well back here, and you've seen all this volume starting to come in at a basing breakout area, which now is the 50, but I'll forever remember it as the 500. And you decide to say, hey, I want a piece of this, and you can get into this area, then you're looking very well from there. You could have looked up to see what kind of institutional ownership was here at this base breakout and understood that it was a leader that had a lot of interest and a lot of institutional ownership, obviously, and there still is. If you don't have a piece of NVIDIA and you're a hedgy, you have people to answer to. They want to know why you don't own any NVIDIA or Meta for that same example. So that's a few ways to see if there's institutional ownership. I don't dive too much into institutional ownership. A lot of the times I do kind of tend to skim over that. So I'm glad we went over it because I need to get through the process again. I need to start, not skipping over anything and get that dialed in. Check the institutional ownership, really see. And it's more important for those stocks like Root. Root is more new, but how many institutions are actually holding this? I'm actually curious now because I haven't looked it up for Root. So we'll do that right here. So here's all your major holders. 62% is by institutional ownerships. And look here, we have Ribbit Management Company. They own 15% of this. So this is very important to know, okay? If one specific company holds the majority of the shares and this company decides to sell their shares, you have to understand that is a pretty large amount that they could sell off into. $67 million worth of Ribbit Management Company shares could get sold off into this. Now, if there was say this 15 was broke down in between 3 or 4 more institutional ownerships, it wouldn't make me as nervous because you would have to see multiple. But if one person decides to pull the plug in Ribbit Management, Root could head down very fast. Okay, so that's just something to keep in mind. I'm not saying that Root's not a potential buy or that they're not a leader, but it's better to understand the top institutional and how much of it they own because they could really sell off into you. Okay. All right, next up, that was institutional ownership, and I hope you guys got a good grasp on that. I think it's important to know. Do you guys have any questions on institutional ownership? I always say if you see the volume in a large stock that's institutions, you and I are not going to make that move. You and I are not going to make that move. That's millions and millions of dollars going in and out of a stock when you see it on multi, mega caps or, the large caps. We'll just say large and mega caps. Small and mid caps, yes, there might be some, retail traders that are really going to make a tick on those penny stocks and stuff. But you know, when you're looking at the leaders, you're not going to be looking at those penny stocks anyway. Okay, next is going to be the market trend. And if you guys didn't know already, I go through this market trend every single time we get together. And I usually start with that, but we're going to end with it now. Okay. The S&P 500 today on October 30th, 2024, to me, right here, right now, looks absolutely beautiful. We have a beautiful bull flag here, right here at this top. Oops, let me get rid of that. Sorry. Bull flag here, right at this top. If it breaks out of here on volume, let's get it. Rip, tater chip to the north side. We want to make some money with ya. And I am hoping that can do that. I'm always a bull for everyone's long-term accounts as well as your swing trading accounts. So, and it always say it pays to be positive. So be positive that this is going to happen. If it doesn't and it breaks the 21-day moving average, that's fine. I'm out. I am done trading and I'm going to wait for the overall market to break above the 21-day moving average like it did back here when I said I was risk on. Okay, so we were risk on right in this area and we've been holding on. We've been risk on for the past 4.82% of the S&P 500's move to the north side. But if it closes below a 21-day moving average, I'm fine with keeping my hands clean and taking the wins that I had for that push. Now I'm going to wait for the market to tell me which way to go. Why am I telling you all this? Because my sense of the direction in the overall market, I use the 21-day moving average. You guys hear me say it all the time. I'm a bull here. I'm cautious bull here. When we're below, I'm a bear. I'm not putting my money in anything unless we are above the 21-day moving average. Not to say I haven't went against my rules and lost some money before, but I'm telling you, you know, sometimes you gotta you gotta learn the hard way. You know, school of hard knocks. Lose some money to learn a lesson, or lose it multiple times to learn multiple lessons, and finally, you know, stop doing that. This is looking great, guys. And the whole reason why I say this is because this is the market's direction. We want to have an understanding of the market's direction when we're trading. Why? Because the most stocks are going to trade with the overall market. If the overall market is having a tendency to follow above, in my rules, a 21-day moving average, you can use the 22-day moving average, the 50-day moving average, or the 200-day moving average. I don't care what you use. But for me, if we're above a 21-day moving average, I am in, I'm a bull, and I'm ready to keep on keeping on. But if we're down below it, the market conditions for me, or the market trend in the CANSLIM, the M in CANSLIM, is telling me to be weary, to stay out of the market and wait for the overall market's direction to reconfirm that it's okay and safe place for me to trade. Okay. Not to say at that time, if you want to paper trade and try and learn how to short, you know, go for it. You know, for example, I did not take the trade, but I decided to take a paper trade for a short for DJT. Why? Because I knew there was this huge area of what? Supply, just like we were talking earlier. I'll mark out the supply for you from the top down. And if I drag it all the way over where this red line was, you can see it came right up into that area and it pulled back and I started to see it consolidate. I wanted to use this 52.43 and this previous pre-market high at 57.50 and then use that as my my stop loss and short this thing down. You can do that too. I'm not saying like don't have fun, don't enjoy your life. Paper trade. But if you're going long, use CANSLIM, wait for the right market conditions. If not, work on a different strategy. Sit back, relax, watch to see what is still holding up, what is still trying to show leadership on these market pullbacks. Okay, so that's what I have for CANSLIM for you today. We are squatting right down in the after hours. We're squatting right down on the 21-day moving average as we speak today. So we'll see if it wants to hold in the morning and if tomorrow will still be risk on and above the water. So do you guys have any questions for me when it comes to CANSLIM or any type of the CANSLIM methodology? Maybe you can help me speak today. Methodology. Any questions whatsoever? Well, good. I'm glad everybody's got a complete and full understanding of CANSLIM. I'm telling you guys, it's a lot to take in. But what's amazing about CANSLIM is you're always learning, especially when it comes to the technical analysis portion and risk management. Okay, when it comes to risk management, you need to take wide and take it small and go slow. And just remember, you can't ever give up. Just keep trying. Just try to make it not about the money. Make it about the trade. If you can make it about the trade and not worry about the money ends up coming. Okay. I keep finding the more I keep myself active in what leadership is, but not active in whether my stock's doing well or not, and just kind of letting it ride and following my rules with the 10-day moving average, and taking X out after 2R and yada yada yada. Things are just working out, and I'm really happy and I'm pleased with them, and we're gonna see, just how much money we can make. So let's keep on getting it, baby. You guys have anything for me, Dan, Bob? Any closing statements?
Nope.
All right,
I could have a question.
please, Eric.
So is there an alternate way of looking up supply and demand other than what you showed? Because I didn't really get that.
Sure.
Like after a chart, after a stock goes down and there's so much red and then it immediately went up, that doesn't show me that there's a short supply of that stock. It shows me that there's a lot of that stock because a lot of people sold it. So is there some other way? I would have thought that it would have consolidated again before it went up.
Sure. And
Is
usually,
there,
yeah, no, I think so that's going to be the
The
portion
value.
that's going to be the portion of technical analysis that I'm talking about. So it's going to take time for you to learn and understand technical analysis. Just know like that the technical analysis portion of it takes a lot of time. And when it comes to the supply and the demand, I'm trying to think of like maybe an easier way of kind of going about learning and understanding it. Do you see this white line that I have in the S&P 500 at 563?
yeah.
Okay, so I'm going to call this an area of resistance. When I say an area of resistance, that's an area of supply. Okay? And why I say an area of resistance, because this area is resisting this going higher. And what is it resisting? Like, what is the resistance? The resistance is active shareholders selling at these highs, at these all-time highs. Okay. So if we come back here, it's shareholders selling here, and it does go back down, and it does start to consolidate here. Okay. Now, the only reason why this is here is because one, it was an all time high, and two, it's hit this same price area of supply multiple times. But when you break through that supply and there's no more supply, no more people selling, that's the only time a stock can go higher, because now more people are buying, more people want more stock, and less people rather want to sell, they rather hold that stock. So, with that being said, the only way a stock can go higher is if there is more demand for something. If not, people are going to keep selling at a lower and lower price because nobody wants it. So, it's harder to get rid of. And that's the simple supply and demand psychology of it. But when it comes to seeing that on a chart, to me, I feel like it's easy because I've been charting for 4 or 5 years now, just constantly drawing these lines down. But when it comes to actually just coming in here and charting, and you need to do it every day, and you should do it with I do it with all the Magnificent Seven stocks. a few ETFs, and then the charts that I like to watch, and you'll end up getting that understanding between supply and demand. Did I answer your question, or is there something that I could further explain?
No, I know I draw charts, so I know about the resistance lines. I never heard them referred to as supply and demand though. So
Sure.
I guess I was just there's a lot I don't know.
Sure. Well, I guess the best way I can look at it, or I can explain it, is like you have to understand, and I kind of referred to this a little while ago, is all of these, all of this stuff, all these candlesticks on here are people, you know. Just some people have way more money than other people, But regardless, it's shares being bought or sold by people like you and me, or even algorithms, just so nobody chimes in with that. But those same algorithms were by people looking at charts like you and me, and then they created an algorithm that they have to turn on and off due to their conditions. Okay. So, with that being said, there's people that have shares and people that are selling shares, right? There are people that have shares and people that are continuing buying shares and selling shares. So that, if you just, instead of thinking it like stock, you think of it like apples, you have, um, if there's less apples and more people want those apples, you got to see like apples become extremely expensive. Like, I don't know if you've heard of the tulip craze, but that's just how, well, that's mass mania. So I guess that's not a very good example, but I could talk about supply and demand forever. But what's beautiful is actually seeing it in the charts. And yes, that's exactly what it is. It's supply and demand. And this to me is the best way to see it, is in the chart. I'm trying to think of an alternative way of seeing it too, but
Well, that does make sense.
okay.
I just had never thought of support and resistance as supply and demand.
Oh,
So
well, good.
yeah,
Good. I'm
yeah, that
glad that.
makes things.
Perfect. Yeah. Well, thank you. I really appreciate you bringing that up, Erica, because a lot of people probably don't realize that, and I guess that is kind of an eye opener. When you really sit back and look at it, is they can't get through here because there is an area of supply, whether it's 10 big guys selling, or it's just a bunch of people trying to take profits at these highs as a conglomerate, as a whole, as a mycelium of people in this universe buying and selling in the US equities. This is the way it grows. And it's really is a beautiful thing. And there's so many opportunities in this market. So, right back at it though, guys, just CANSLIM is absolutely amazing. It's a great guide, and it helps you kind of dive deeper. And so if you don't fully understand CanSlim, you got to understand, I've been doing this forever. This is the first thing I picked up, and I have been focused on CanSlim, and I'm still learning things about CanSlim. You know, like I told you today, I really have been jumping over the institutional ownership. I just pass it right up, right? Why am I looking at stocks that don't have institutions in them? Why am I wasting my time with those? So, maybe it's time to get even more discipline and focus more on those. Does it completely achieve CANSLIM? If it fully does, then let's find the supply and demand areas, or the support and resistance. Find a base or trend breakout and make some damn money in this market. I hope you guys have an awesome night. And of course, use the general chat if you guys have any questions. And Zamora, I'm going to get your stuff out on Monday. I'll be going to the post office to send everything out. So we'll see you guys on Sunday as well, for the live meeting. And I'll have the stock chart for the scanner posted on Saturday morning, by Saturday morning. Alrighty. I hope you guys have an awesome night.
Wood and Erica, do you guys would hang out a minute? If you got time.
Sure.
Yeah, what's up?
Just wanted to get to know you a little bit better, Wood.
Yeah, this has kind of become a hobby. I've just become obsessed with it. So it's a lot of fun. But